the first story that I wanted to talk about was Silicon Valley Bank. And for those who do not know, SVB or Silicon Valley Bank, they basically had a run last week and collapsed. The FDIC had to come in and take them over. And with Mac being a venture capitalist, I just thought that he would have a unique perspective in this part of the conversation. I've been following him on Twitter and just watching some of the knowledge that he's dropping out there. So I wanted to just kind of open it up, with this. It's like, so the news is dominating everything. It is the second biggest bank failure in American history. So I just wanted to just kind of open up the floor to everybody. What are your thoughts on this? What are your thoughts on what the FDIC had to do? And ultimately, anybody who's got more than $250,000, what are your thoughts on what they might do, what they're going to do to get these, these depositors? Because I don't want to say investors, because most of these folks that's in trouble are not investors. They are, here's my money, bank. Can you please hold it for me until I need it type folks. And that is a different situation than what I think a lot of people understand.
I guess.
Well, go ahead, Matt.
Go ahead, Terrance. You got it.
I was going to say, I think this is just perspective. I think it's wild that banks in general would be like, hey, give me all your money. And then they say, all right, now we got your money. We're going to use your money as collateral to do something wild. And if it don't work, or you need all your money, even though we got your money, don't take it out, because we may not have it, but we told you we got it. We're good for it, but don't take it out, because we got this other stuff going on and we used your money to do this other stuff, but we got to let that cook for a minute. So don't do nothing, relax. And if you all take it out, you may not get none of it back. That's just I think that's wild. I really think banks need to go back to, I know people was going to hate this, they need to go back to charging folks a fee to use the bank. That way banks can make profits and not have to have this side stuff going on because they got our money in the first place. Now, I know a lot of people can be like, oh, no, I ain't giving nobody a bank. I'd rather just keep it under mattress or whatever. I don't know the answer, but banks are not a bank just to keep your money. A bank is a business. They're going to take this money and going to figure out how to do something else with it so they can profit. And SVB is, in my opinion, the result of what happens when that side stuff don't work the way they thought it was. Now, correct me if I'm wrong, Matt. Give me some more insight. I know you probably work on, I'm sure you work with money. I'm sure you've ran an SVP before, VB. Let me know if am I tripping? Is that a decent perspective, or that's just like layman's terms and it's way more complicated than that?
I mean, it is more complicated, but in basic terms, yeah, that's how banks work, right? That is how banks work. If everybody who has money in the bank showed up at a bank tomorrow, like, I want my money, this would happen to any bank. And I mean, the Silicon Valley Bank situation is so unique in that it was a bank run facilitated very much so by social media. But also it's a bank that specialized in working with corporations, not consumers. So like the dollar amounts we're talking about are very different. But here's the thing about, like, can we laugh a little bit, right? It's like the thing about Silicon Valley Bank is it failed because of a terrible PR strategy. Like literally the 16th largest bank went down in essentially 12 hours. They tell you 48. It wasn't 48. It was 12. That's when happened in 12 hours because of bad PR. Like, I don't know who came up with their PR strategy, but like, you can't just fire them at this point. Like, what's worse than getting fired? Like, can they get banned from the industry or something? Like,
lose your PR license.
So this is what happened. So Silicon Valley Bank had some treasuries and some bonds that they were holding. They were long-term bonds and treasuries that they were holding because in 2020 and 2021, everybody was flush with cash, and like the amount of deposit they had grew exponentially. So they got to move the money around. You got to get creative. Like this, you don't have as many places to put the money that are safe enough, so you're trying to find the right places. Well, these bonds and treasuries they were using are getting eaten alive by the increase of interest rates. Mm-hmm. Like nobody's expecting interest rates to go as high as they are. like, you know, as a bank, like if you're going to model something, you're going to model at like the most extreme is like a 4% interest hike. We already passed that. Like we passed like the doomsday scenario. And so what they were doing was they were selling off some of those treasuries and bonds and securities to shore up their balance sheet. But they were selling them at a bit of a loss.
Right.
So at that loss,
bit of a loss.
I mean, look, you sold 22 billion.
Yeah.
You had a $2 billion hole, right? Now, granted, had they just held those treasuries for 10 years, for another 7 years, they come to full maturity and they get their money, right? So like they didn't even have to do this. They were trying.
That's what I was like. They're 10-year treasuries. Why are you selling them at all? I really didn't understand what the point of selling them, you know, as quickly and as dramatically as they did. Like, what are you doing? You bought them to hold them for 10 years. You knew the market and the interest rate was going to fluctuate in that time. Like, what caused them to panic in this instance, instead of doing what they bought the bonds for in the first place?
I don't think they were necessarily panicking as much as they were trying to shore up their balance sheet, because they went from being flush with deposits to, you know, we see what was going on with the economy. There's a lot less money moving.
So,
right? So
let
not
me.
as much money in the bank. So they were just trying to shore things up. But here's the problem, right? Here's the problem. They sold that. They had a loss, and then they had a strategy to raise money to cover those losses, right? Here's where they messed up. They put out the press release saying they sold this and that they're looking to raise the money, which means if we don't raise the money, we got a hole in deposits.
Right.
Which is a scary thing. What you should do, because like they didn't have to do this. Like they didn't have to tell anybody anything. What they should have done is sold the securities, did they thing, raised the money, then did the press release of like, hey, we sold this off, we had a loss, but we raised the money, everything's all good. Would have had no problem.
Do you? My assumption as to why they had to sell the bonds in the first place was, I think, I have to look into it, but the not original investors, I think it seems like they needed that money. And I assumed that some big heavy hitters within SVB, I don't know if they were original big venture capitalists with a lot of money that's like, yo, I don't like what's going on. Let me pull some of this money out. So, SVB is like, all right, well, if they pull their money out and we let them go, we need to get that money back, because if we don't get that money back, or whatever the case may be, all the little people are going to freak out. So it's like, all right, we need to raise some money. And like you said, the PR strategy was wrong, because you respect them for saying something, but they could not have not said anything and figured that out on the back end. But I think, again, I'm like, all right, so why were the venture capital, or the people at the top, we'll just call them for short, people at the top took that money out to where SVB needed to raise that additional funds.
I in one of the articles I was reading to research this particular situation, I know one of the things they talked about, like maybe 4 or 5 different things that kind of contributed to this whole thing. But one of the things they talked about was the fact that these startups who have these accounts at SVB, it's not just the venture capitalists putting the money in there. All these businesses actually have their business accounts that they paying people out of and everything else, have not actually adjusted their burn rate to kind of go along with 2023 and not 2019, when money was flowing like water. Everybody out there still spending money like water, but they don't have it like that. And now the bank doesn't have any money because these startup founders still, want ping pong tables and Red Bull and on every floor. And they haven't really, tightened their belts like they needed to get with the times.
And were they taking loans out?
Let me just correct something here, right?
Okay. That's what we got you here, because we running around here with information from the internet. We need somebody on the inside.
So first of all, what SVB was trying to do by some of those securities is being prudent and getting ahead of whispers that were happening, right?
I got you.
But by trying to get ahead of it, it alerted a bunch of folks who said, hey, let's talk to the CEO. And he came out and said, don't panic.
The worst thing he could have said.
It went down from there, right? And
the worst thing he could have said.
Silicon Valley Bank is the 16th largest bank. It is not a start. Like, they specialized in working with startups. That was not their only customer.
Gotcha.
Right? So everybody keeps talking about VCs and startups. Yo, Roku has $500 million locked up. USDC has $3.3 billion locked up. I know several nursing homes that had their money locked up. I know several mom and pop shops that had their money locked up. I have a friend who had his personal money locked up. They were just a bank. They were a large bank, and they specialized in working with corporations. And the name Silicon Valley, everybody thinks, oh, all these California startups. No, like, this is a lot bigger than that. Like, they're investors in other banks. They own other banks, right? And even when people talk about VCs, all these rich VCs are drunk on their money. Understand who VCs are and what we do. We're glorified money managers. We manage other people's money. So when you start talking about big VCs, you're talking about they manage endowments for universities. They manage pension funds, money from pension funds from different states. Like, understand, if a VC fund goes down and they lose all their money, that's not their personal money. That's your money.
Right.
Right.
Yeah. And so one of the things that you actually said, Mac, was that a lot of their customers aren't regular customers that are going to fall under the $250,000 that you get insured by the government for. A lot of these are small businesses. And I think because most small businesses have 4, 5, 6 people in them, that we think that that's all small businesses. But small businesses literally can be, hundreds of employees with millions of dollars that's coming in. So these companies aren't necessarily making investments. Silicon Valley Bank just happened to be the bank they decided to do banking with. So there's like, hey, every, first and the 15th, we expected to be able to come here, pull money that we've deposited into the account, not trying to do anything crazy with it. We just, instead of keeping our, $2-3 million for payroll under, under the mattress, we actually put it in a bank so that when we need it, we can just go to the bank and then pull it out. Those kind of companies are being affected. And what I've been looking at, a lot of folks on Twitter and, just on social media in general, you got to let these banks fail. And it's like, I don't think you understand the people who are saying that what will fail. We're talking about, an enormous amount of small companies that employ literally millions of people collectively. And when you let that fail, you got folks today is the 13th that we're recording this. People will generally start hearing this tomorrow on the 14th. 15th is payday for half of America, for half. And a lot of that half to get paid on the 15th, their companies deal with Silicon Valley Bank. So if Silicon Valley Bank doesn't have, if the government doesn't come in and do something, then you literally have potentially millions of folks who they miss their payroll, or companies have to do things like, we got to lay everybody off, hopefully temporarily, until we can get this issue figured out because we can't pay them. So those are the kind of nuggets, Mac, that I've been seeing you drop on, on Twitter over the last couple of days. So I don't want to take credit for that, like I came up with it, but I think that is a lot of what people just don't understand. That this is not big time, $1 billion investors. This is just companies that happen to, be above the $250,000 threshold for FDIC insurance that are, the government is trying to figure out what they're going to do to make these companies whole so they can make that 15th payroll.
But let's be 100 about it. Why are all these companies with SVB? Because it was the only bank willing to bank them. And especially when you want to talk about Black founders, you got a startup, you're just getting started. You need a business account. You go to a Bank of America, what you going to get? You go to Wells Fargo, what you going to get? You go to Chase, what you going to get? Silicon Valley Bank was like, you ain't got no money, but you starting something? All right, we'll give you a shot. That's what they did for me for my first company back in 2010. And wasn't nobody caring about Black founders back then. I promise. Right. So understand, like, the failure of Silicon Valley Bank is a detriment to the entire industry, because like that's where you could go, especially as a Black founder. Right?
And it did seem like, in everything that I've been hearing and reading, like this bank was unique. Like there was no other bank that could support the tech industry the way that SVB supported the tech industry. So the idea that it may go away entirely right now, I think it's under government control. I know in the UK, HSBC bought the UK branch of SVB, but I think here in America, it's under government control, and they're going to do some reorg and restructuring, but hopefully it doesn't actually go away, because it would be a lifeline that gets cut for a lot of different companies. Now, is this though on the part of kind of the folks that made the decision to do the sell down in the first place, kind of just capitalism chickens coming home to roost, or did they really have to do it? Was there no other way to get what they needed done? Or the second part of that question, could they have done it a different way without selling off the bonds and holding them for the 10 years? Or was it really just a matter of the way they made the announcement and the way they spooked everybody by making the announcement?
It was truly the announcement. It was the spooking of people. Like there's a lot of different things. There's a lot of things they could have done differently. Chief among them, you change the way they do that announcement and order operations for it, you probably don't have this. And then yes, everybody's mad at the investors for pulling their money out or telling companies to pull their money out. Look, like I said, we manage other people's money. And so
I can't tell you to
see
sit
a
tight.
bank and you think like, hey, something might be wrong.
Right.
You got it. Like you have to do the prudent thing because you have a fiduciary. Because like if you want to be principled, like I'm staying with Silicon Valley Bank, they've been good for me. This is all panic and fear based. I don't care about the mob. Like this is a good bank. Well, if you're the last person holding the bag,
you holding the bag.
And your people come to you and ask you, so what about our money? Like, oh, that money you gave me is locked up. I'm waiting. Hopefully, I get it. I can't have that conversation with nobody.
Right.
Sorry.
Right.
That's not a conversation. So, like, what do you do? And like, this is coming from. I like Silicon Valley Bank a lot. They're really important to the industry. But once the mob start moving, I can't get in front of the mob and make them stop. I can't be like, y'all being stupid, y'all. This is ridiculous. Like, go back home.
Down.
We be all right.
Yeah, right before we came on air, I was actually watching. I think it was on CNBC or something like that, and they were talking to a company, a CEO of a company, and she was basically saying, "Is like, this wasn't even on my radar. It was one of my investors sent me an email that was kind of crazy. It's like this investor sends emails all the time, but they usually are well written and nothing to make you panic. And it was like, okay, let me go ahead and call him right fast because this is something that is different than all the other emails that I've seen. So I call and he says, get all your money out of SVB, why can I not say Silicon Valley Bank, the acronym, but I'm just going to say Silicon Valley Bank, get all your money out as quick as you possibly can. She's like, at that point, I'm not really trying to, I'm going to stick one out and tough it out for the team because they've really been good. It's like somebody that I trust is telling me to get all my money before I can get all my money. So I have payroll that I got to make on the 15th. I have suppliers that we have to pay, Friday. We've got all these different things that we have to do with the money that's in that account. I can't chance not taking it out now as compared to taking it out next week when it may not be available for me to take out. So I think if you just extrapolate that across all kind of company owners and CEOs, it's like, hey, I don't know what's going on, but something's going on. Let me go. Nobody.
It's like when you see somebody running, you don't ask questions. You just start running.
Some people do, but they often get shot. I'm not trying to stick around for that.
No,
not trying to stick around for that.
Start running.
so that was a big part of it. But Mac, I wanted to ask so like I said, the FDIC part is figured out. That money is already available to people today. They were able to get that money out today, but that's $250,000 or less. What is the government doing? Is it like a conservatorship or receivership? What are they ultimately doing for the money that folks weren't able to actually get out that is above what the insurance actually covers?
So as a receivership, FDIC has already taken over the bank. The bank employees will be working for the government for the next 45 days, and they are selling. Everything's a sale. Everything's for sale. The Federal Reserve put out a press release last night stating that it has gone through the highest channels of the government to the point they have gotten presidential approval to do everything they have to make sure that all accounts, assured and unassured, all the debits assured and unassured, are made whole. And they have an extra $25 billion set aside in governmental money to cover any gaps should there be a gap. Right. This is really unique, and that happened really quickly. One, because people got to the government and let them know like how big of a deal this was, because like everybody was caught off guard, right? Like nobody saw this coming. Also, the other thing was SVB was a healthy bank. They had reportedly somewhere in the neighborhood of $209 billion in assets, with $179 billion worth of deposits they need to cover. Right? Like in a failing bank, you don't have that.
Right.
Right.
Yeah, they just had the Wall Street Journal had something that said they and what's the name of the other bank?
First Republic?
No,
the one that got shut down.
Yeah,
was it Silvergate?
Yeah, it started with an S. I can't. The name is escaping me right now for some reason. But they both had gotten ratings from the FDIC, like good ratings, less than a month ago.
Yes.
So it was just like who dropped the ball on this? Like who didn't see what they should have seen? Who missed the red flag or the baby pink flag? Like I imagine stuff like this can happen sort of catastrophically overnight kind of deal, but
just panic.
I also think that there were some signs at some point that somebody missed or ignored.
There were signs, but like this shouldn't have happened. This literally failed because of a bank run and panic.
Right.
If you don't have that, this bank exists for another 100+ years.
Mm-hmm. So Mac and I were actually talking about this in the pre-show, but if this would have happened, and I initially wanted to say if this would have happened like in the 80s, it would have never happened because the news just doesn't move that fast. But really, this wouldn't have happened in the early 2000s. Because you figure this really, things started going south Wednesday. They were in trouble Thursday, and then the government had to come and take over on Friday. I mean, it was really, like you said, Mac, that 12 hours that things just really, really went south, and it was so bad that usually what would happen in this instance is that the government would at least wait until the close of business to go and take over. They didn't do that. They actually did this in the middle of the day. It's like 12 or 1 o'clock, in the afternoon is when they said, no, we can't continue to allow this to happen. We got to come and take this over right now. So there's a lot there. But like, as I said, we were talking about in the pre-shows that this really could happen to any bank. If everybody says I'm going to get my money out right now, there's a lot of banks will be in a lot of bad ways if that were to happen.
Well, and then you also have to put the idea that some of those Dodd-Frank era protections got rolled back under the Trump administration that may have at least raised a baby pink flag for somebody before this happened. So, like I think this may be part of that collateral damage, or maybe we'll look back on it as part of the collateral damage of the Trump administration. I mean, he just really came in and just wrecked shop on a lot of stuff that we have no idea about and won't really understand the ramifications of for years to come, because I don't necessarily claim to know much about policy, so I'm not going to try to get into the weeds of it, but there was something in Dodd-Frank that was enacted back in 2008 that would have prevented or helped folks see this coming down the pike. But once Trump kicked that out, SVB sort of loopholed themselves out of that particular, requirement. And it's just like, man, I think we're going to start to see a lot more of that across the board and other industries and other regulatory efforts and different things like that that just are in shambles now because of that administration.
We'll see.
So what are some lessons, if any, that can be learned from something like this? Like I mentioned at the top, do banks have to start charging people money so they can be more liquid when and if these depositors come asking for their money? Is it tighter restrictions like Stephanie mentioned? Is it better press releases? Is it what are some lessons? Like if I am just starting a business and I've got $1 million I need to put somewhere, knowing that this stuff just happened, knowing that the FDIC can only insure 250,000, but I need to be sensible with this income, with this money, so I can keep afloat. What are some lessons or what are some tips that can be taken from this?
So this is what we've been telling our founders at Rare Breed. You need to diversify your banking position. You want to have a minimum 2 banks. We suggest 3.
Okay.
Right. Of those 3, you want one of them to be a top tier bank. Right.
Okay.
A Bank of America, Chase, or something like that. Wells Fargo's racist. Stay away from them.
Bank of America ain't too far behind them, but keep going.
I mean, but like when you still got lawsuits for redlining and like,
true,
right,
2010s, like we can't bank with you. I'm sorry.
They on American Greed. Anybody on American Greed, leave them alone.
Really, for real.
You want to keep accounts that are not far away from the FDIC assurance level, and you want to consider putting your money in a sweep account where you're actually insured at a much higher level, typically $1 million, sometimes higher, but you're not going to get any interest, or you're going to get very little, if any, interest on the money in that account. But you're more assured, right? So having at least those 3 accounts. Now, if you want to keep most of your money in one of those accounts, that's fine. I wouldn't suggest it, but you need to have a way. If you need to move money, you need to have accounts to move. Because that was one of the big things that happened was people heard take your money out of SVB, and they're like, "Great, but I don't have another account."
And put it
well, it takes time to open up a business account.
That's right.
Shout out to all the bankers who didn't go home this weekend and were just opening up accounts left and right, trying to help people out.
Well,
but people didn't even have accounts to move their money to. So like, if you knew where SVB branch was, you was going in and getting the cashier's check and working it that way. But like, you at least want to have the way to move your money if needed.
So don't be so single threaded.
Yes.
Okay. All right. So I'm certain that we will be talking more about Silicon Valley Bank because this is huge. It is when you say the second biggest something that happened in history, is like, so this is not Michael Jordan of bank failures, but it is the LeBron James of bank failures. It's like this is the second biggest one that has ever happened.
Some would argue it's the Kobe Bryant of failures, but I'm gonna let you cook.
You know the point I was making. So